Tommy Vercetti walks into a rundown taxi company in Vice City. He drops cash on the counter, buys the whole operation. Within days, money starts flowing in. Not from missions, not from gunfights, from a business he barely touches. That moment taught millions of players something Wall Street charges thousands to explain. Grand Theft Auto is one of the most profitable entertainment franchises ever made. Over 400 million copies sold. Billions generated through GTA Online alone, but buried inside the chaos, the car chases, the heists, the 5-star wanted levels. Rockstar embedded a financial education most players absorbed without ever realizing it. 8 money lessons hide inside this franchise. You've probably used every single one. You just never had a name for them. Lesson 1. Diversified income. Vice City. Tommy Vercetti doesn't stop at the taxi company. He buys a strip club, an ice cream front, a car dealership, a film studio. Each business generates its own revenue stream independent of the others. If the taxi company slows down, the film studio still prints money. In 1952, economist Harry Markowitz published a theory that would win him the Nobel Prize. He proved mathematically that spreading capital across uncorrelated assets reduces risk without necessarily reducing returns. Wall Street calls it modern portfolio theory. Tommy Vercetti called it Tuesday. The lesson: never rely on a single source of income. One stream dries up, the others keep flowing. Lesson 2. Asset appreciation. GTA 5. Early in GTA 5, Franklin can buy a property called the Smoke on the Water Shop for $204,000. It loses money at first. Players who sell it early take a loss. Players who hold it watch the assets slowly generate returns week after week. Real estate follows the same principle. The median US home price in 1994 was $130,000. By 2026, that same home is worth over $400,000. The owners who panicked during the 2008 crash and sold locked in their losses. The owners who held recovered everything and then some. Assets need time. Patience is not passive, it is a financial strategy. Lesson 3. Risk versus reward. Heists. Every GTA heist presents the same choice. The loud approach, more firepower, more chaos, higher chance of a massive payout, or total failure. The quiet approach, slower, more methodical, smaller individual scores, but a higher probability of walking away with something. This is not a game mechanic. This is portfolio construction. In 2020, Cathie Wood's ARK Innovation ETF returned 149% by betting aggressively on high-risk tech stocks. In 2022, that same fund dropped 67%. Meanwhile, a boring index fund tracking the S&P 500 lost 19% and recovered within months. Higher potential reward always carries higher potential loss. Every heist teaches this. Most players just never applied it to their brokerage account. Lesson 4. Market manipulation. GTA 5 stock market. GTA 5 single-player campaign includes a fully functional stock market, the LCN and BAWSAQ exchanges. Lester gives Franklin assassination missions.
Okay, you know Redwood cigarettes?
Sure, the cigarette that built America.
They've rigged a jury to throw a class-action lawsuit that would cover the treatment costs of thousands of emphysema sufferers. There are 4 corrupt jurors on Redwood's books. I'll send you the details. Oh, and we only have a few hours to make them disappear. The court case is tomorrow morning.
Is that all, dog? Shit, that's quite a favor.
And that's quite a house you're living in. Get this done quickly, and I'll try to throw in a sweetener as well. Now, I'd advise picking up some long-range hardware to get this job done. You'll be helping a lot of people with this, Franklin, including anyone who might have a sizable investment in, say, debonair cigarettes.
This is textbook insider trading. In 2001, the CEO of Imclone Systems sold over $10 million in stock one day before the FDA rejected the company's cancer drug. The stock collapsed. He went to prison. So did Martha Stewart, who sold 4,000 shares on the same tip. GTA 5 doesn't just simulate a stock market. It simulates the crime that surrounds it. The game rewards the behavior that real markets punish with federal charges. Lesson 5. Inflation. GTA Online. When GTA Online launched in 2013, a high-end apartment cost $200,000 in-game. A solid car ran about $150,000. Players could earn that in a few hours of grinding missions. By 2026, new vehicles cost $1 to $3 million. Properties run over $5 million, but mission payouts barely changed. The same grind buys less and less. Your money loses value while prices climb. This is inflation, the silent wealth destroyer. In 1970, a gallon of milk cost $1.15 in the United States. Today it costs $4.20. Same milk, weaker dollar. GTA Online accidentally built one of the most accurate inflation simulators ever created. Lesson 6. Time versus money. Shark cards. GTA Online offers shark cards, real money for in-game currency. A Megalodon shark card costs $99.99 for $8 million in GTA dollars. Or a player can grind for approximately 40 hours to earn the same amount. This is the time value of money calculation every working adult makes daily. A lawyer billing $300 per hour earns more by working one extra hour and buying the shark card than by grinding for 40 hours in-game. A student working minimum wage earns more by grinding because their time costs less in dollar terms. Every shark card purchase is an implicit statement about what your time is worth. Rockstar understood this equation perfectly and built a $1 billion business on it. Lesson 7. Sunk cost trap. Failed businesses. In GTA Online, players pour millions into nightclubs, motorcycle clubs, and bunker operations. Some of these businesses require constant resupply missions, staff management, and security upgrades. The returns are mediocre, but players keep investing because they've already spent so much. Behavioral economists call this the sunk cost fallacy, continuing to invest in something because of what you've already spent, rather than what you'll actually gain. Blockbuster Video knew streaming was coming. In 2004, they had the chance to buy Netflix for $50 million. They refused. Instead, they kept investing in their failing store network. By 2010, Blockbuster filed for bankruptcy. They had already spent billions on the physical store model. They couldn't admit it was dead. The money you've already spent is gone. The only question that matters is whether the next dollar in produces more than a dollar out. Lesson 8. Leverage. Heist crew selection. Before every GTA 5 heist, players choose crew members, hire cheap gunmen, they take a smaller cut but perform poorly, hire expensive specialists, they take a bigger cut, but the operation runs smoothly and the total take is larger. Spending more on the right people generates a higher net return, even though the percentage cost is higher. This is leverage, using resources strategically to amplify outcomes. Every successful company operates on this principle. Amazon spent $42 billion on fulfillment infrastructure in 2022. That spending didn't reduce profit, it created the system that generates profit. The cheapest option is rarely the most profitable one. The synthesis. 8 lessons. Diversification, asset appreciation, risk management, market mechanics, inflation, time value, sunk cost discipline, and leverage. None of them came from a textbook. All of them came from a game about stealing cars and outrunning the police. Rockstar didn't design a finance course. They designed systems. Supply and demand, risk and reward, time and money. And those systems mirror the ones that govern every dollar in the real economy. The players who recognize these patterns inside the game are already thinking like investors. They just need to apply the same logic outside of it. The treasure was always there. Most people just never looked down.